Investors and traders, welcome to the channel. Today is 24th of January 2024, and I hope everyone is having a great day. We will be taking a look at the stock indices and the key markets for the United States. As always, this video is for educational purposes only, and it is not a financial advice. So we will start by taking a look at the bond market. So this is the daily chart of the long bond futures. So this is a 30-year bond, treasury bond futures chart. And here, one of the key patterns that we are watching for is at 118 and 28 seconds. So look, we are getting very close to today. The bonds did have a sell-off today, and tomorrow we have, and also on Friday we have some key data coming out. So the chances are that maybe we might actually get to this level that we have been waiting for, and then we'll have to wait and assess and see how the market is going to hold, whether the market will be able to hold that level, how the price action is going to be when it gets there. So the thing is that if with this pattern formation of one-to-one price projection APCD right at the 38.2% Fibonacci retracement, it's going to be a pretty bullish sign if the bonds are able to actually move higher from here, so they find good support. And also with the likelihood of the economic data coming out tomorrow and also on Friday, this is pretty important, and that should also actually help stock market as well, because the old saying is that bonds do not need stocks, but the stocks do need bonds, because what it means is that as the price moves down, the yields are rising higher. So the expectations of the investors most likely is that the interest rates might not be coming down as quickly as the investors would have thought earlier on, or to put it in other words, the Federal Reserve, as they had indicated last year, they might not be as aggressive in cutting the rates down because of inflationary pressures coming from the marketplace. So let's keep an eye on this one. It's pretty important for tomorrow. Let's take a look at the dollar. Dollar, again, it's been pretty strong over the course of past weeks. What we have seen is actually weakness come in a dollar, but it is still above the 20-day moving average, and of course it has broken above this channel. And where we are finding some resistance come in is right at the 78.6% Fibonacci retracement. There is a chance that the dollar might actually might make an attempt towards the 104 level, but it is interesting to see weakness come in this market. Now let's take a look at the US JPY, so the Japanese yen. So weakness in the US dollar should also help stocks, and we will get to the stock indices shortly. Here, this is a currency pair where the dollar had been pretty strong against the Japanese yen. You can see that ever since it found support from the 78.6% Fibonacci retracement, it's just gone and retraced above and between the 61.8% and 78.6% Fibonacci retracement. And much like the dollar, which was weaker today, the yen actually excuse me, got stronger against the US dollar. So this is something interesting to keep an eye on, especially we have some data coming out tomorrow and also on Friday. Okay, so let's also take a quick look at the gold market. So this is the COMEX gold daily charts, the futures markets on the spot market. The chances are that this ABCD one-to-one price projection we were looking for, right down to 1988, 87, that level, to even further to roughly around 1983, which is the 78.6% Fibonacci retracement. That region might actually become a focus where this market actually might be heading to. Below that, we have the 1937, which is a really key support. So shorter term, it looks like the momentum is now negative for this market, and there's a good chance that this could actually, in fact, target 1988 to 1983 level per ounce. Okay, so now let's quickly take a look at the crude oil. So crude oil had been stronger today. In fact, it gained 1.14% this trading session for the day, and now it is going and challenging these highs coming in from 76.15. So actually, let me draw it for you guys. So here we go. That's the high which is going to come into focus, and that we had discussed in our video yesterday. This price projection 1 to 1 ABCD around $77 and 66 cents per barrel is also in focus, and of course getting above this 79 or roughly speaking $80 per barrel level would be pretty positive for this market, where this market has been just selling off since last September. So again, there is some positive momentum coming in this market. Also quickly taking a look at the natural gas. So we had a really positive day coming in natural gas, and it was up 7.74%. Now this market is really really volatile, and this could be sort of as a double bottom again with the energy complex. Looks like there might be some strength coming in this sector. Okay, now we'll begin to take a look at the key US stock indices. In fact, let's start with NYA, which is the New York Stock Exchange Composite Index. So here we go. What the index is trying to do is it try to rally, and towards the end of the day, sellers came in, and it has formed a potential double top bottom, which is not a confirmed, excuse me, a double top formation, but not a confirmed double top. Again, we have the 1.272 Fibonacci expansion right here. Then let's take a look at the Dow Jones E-mini futures. Here for a number of weeks now, we have been discussing this big ABCD pattern formation, and what we have seen is just this index trade sideways. Other indices such as Nasdaq, the S&P 500, they have been much stronger. But as we had discussed yesterday, the S&P 500 actually also was really near completing its ABCD pattern formation, and it might have actually done that. We'll have a review for that index, so let's keep this in mind. And this is a completed pattern ABCD in the Dow Jones, and we are looking at the futures market, the Dow Jones E-mini futures, SPX. Now let's take a look at S&P 500. This is the cash market. Here we were looking for 49.10. Roughly speaking, the market came pretty close to that. The high was 49.03, so pretty close to that. And here it just completes this 1.618 expansion of ABC of this BC leg, and also it's pretty much there for the this big ABCD pattern, which in my opinion has also completed. So this is the second market which has this market has now actually completed this pattern formation, and Dow Jones we already had a look at for the E-mini futures. Now let's take a look at the Nasdaq 100. Nasdaq 100. Let me actually quickly take you to the weekly chart. So yesterday we were looking at 17,700 as the shorter term target for this market, and this is what it has exactly done. So we have actually achieved that in one day. So we'll take one thing at a time. On the weekly chart we do have some higher level targets as well, but this is something which we were looking for because this was just an expansion of this BC swing. Now if I take you back to the here we go. So this is the daily chart, and we can see we have the smaller 1 to 1 price projection ABCD completed, and right at the 17,700 level as well, which was the expansion of that BC swing which we saw on the weekly chart. So again, a number of these stock indices that we follow on daily basis are actually trading at their really important key levels, in some cases even critical levels, and also completing these pattern formations as well. So there is the chances of a pullback, some sort of a pullback. How aggressive it is going to be, we'll have to wait and see, but the chances of a pullback is actually increasing now as we see our key levels being hit, our targets being met, and a number of these patterns getting completed as well. So here maybe using some trailing stops might be a good idea. Again, not a financial advice, just thinking about it. Now, finally, last but not the least, the Russell 2000. This one continues to find resistance from the 38.2% Fibonacci retracement. Yesterday it made an attempt, wasn't able to clear it. Today it made an attempt, wasn't able to clear it. Now, potentially we might be in the throes of a potential formation, which might actually look like this, which is the one-to-one price projection. Here we go. Here, boom, because it's coming from the 38.2% Fibonacci retracement. So the chances of something like this happening, or from in stronger trending markets, the 38.2% Fibonacci retracement is usually a pretty strong resistance level. So if this pattern were to take place, that's of course pretty negative for this market, but it will also take it down to around the 61.8% Fibonacci retracement, and this level of 1814 or 1815 will be a key level to take a look at if this scenario were to take place. Now, obviously, it will only get confirmed when this swing low of the 17th of Jan 2024, which is basically the BC leg, if this were pattern to unfold, is taken down to the downside. But again, if we do not see a close above the highs of 2020, then the chances are that in fact this pattern is unfolding, because we have had two consecutive daily closes below the 38.2% Fibonacci retracement, and these have been the bear bars. So this market is looking under pressure from a pattern perspective. So thank you very much for watching the video, shorter video for today, and we have some key economic data coming out for tomorrow. And yeah, so just to reiterate, this is the big ABCD price pattern that we were waiting for. It still has a chance to actually go on and hit the exact number of 4908 or 4910 roughly speaking, but it's just been pretty close today. So thank you very much for watching the video. Good luck and good trading, and speak to you guys soon.